this video, I'm going to be talking about this trade that I'm in on Euro US dollar. So right here, I already scaled out 70% of the profit, and I'm going to allow the rest to run. So I'll just give you a rundown of the trade, why I got into it. So basically, looking at the 4-hour time frame, you can see we've been trending to the upside. Low, high, low, high, low, high, low, high, low, high, and prices intentionally leaving this trend line liquidity. There's liquidity resting all below this area, but why there's liquidity resting there, it doesn't mean that we're going to be trading or trying to hunt this liquidity. This expansion right here, we're anticipating to see a retracement to the downside and for price to run liquidity. Now, if you look at this right here, you can see that we had this inefficiency. Price tapped into that inefficiency. After that, we dropped down. This candle right here came very close to this inefficiency resting right here, but it didn't fill. You can see it came very close, but it didn't feel that inefficiency. So so after it failed, they left liquidity resting above their high right here. So what I'm anticipating to see is a run above that high and then a 15-minute shift to market structure. So as you can see right here, price came to that high, came into it. This was the inefficiency. This was the high of the candle, came very close, failed to run above the high. I'm also going to show you another reason why this zone was a very high probability key level. If we go to the monthly time frame and you use your Fibonacci on the wicks, you can see the Fibonacci. If you put this Fibonacci on this wicks, you can see that right here, the 50% being the consequent encroachment, that was also the area price came into. Price tapped into that area. All we want to see right here is a 15-minute shift in market structure. And if we go to 15 minutes, you can see right here, we made a low, made a high, broke structure, last impulsive move to the upside before they dropped the broke structure. Right here, price came into it, displaced to the downside. After displacement, I went to the 1-hour time frame. So if you wanted to get into the trade, the first entry would have been right here. This blue box would have been your first entry, stop loss above this high. Second entry, this inefficiency. All you want to see is price coming to this position, 5-minute shift, because there's no way to tell whether it's going to be right here or here to put limits, so you don't know. All you do is you wait for price to come into this position. You see that, wait for 5 minutes, break of structure, price is in. So the moment price came in, this is the low, this is the high. Price came down, failed to run the low, came up, failed to run the high, dropped down, broke structure. This high right here was my first entry. Right here, why this high? The reason is because of something I always told you in the previous videos, and that is that in situations like this, after this was the last impulsive move to the upside that dropped down to break structure, a lot of traders are going to be trading from this position, putting their stop losses here. That is why my first entry was this high. Stop loss here, because already this low has been taken. I want this high to get sustained. So the moment price came in here, came up here, took liquidity, dropped down, broke structure, I put my first limit order here, stop loss above this high, and price came here nicely, dropped down. Now what do I want to see within this range? I want to see a 2-minute shift in market structure from here for my second entry. Now we'll go to 2 minutes, and as you can see right here, we made a low, we made this low, created this high, broke structure. Right here, this inefficiency, my second entry, and look at how price came back up, tapped me in, second entry, dropped down. So the first and second trade, they're both in profit. and I've secured 70% of both profits. So I'm just leaving it to run. So whatever it wants to run to, I don't care. But at the end of the day, this is the swing low, the swing high. So we still have a very big zone for price to fill. So price can decide to come into this inefficiency or decide to come in here. Any of those places is still available. So I will leave the little profit to run, and if the market decides to reverse, that's okay, but I've made money. So this is why it's always very essential to always make sure that you have a very realistic risk to reward, despite the fact that you are expecting price to really drop very well. It's also very essential to not hold the full volume to hit your take profit. Always have areas where you secure profit. So if you have any question based on this, you let me know.